Welcome to the daily video update snapshot edition, your alternative to watching the full length daily video update that I publish each day on YouTube and Rumble. We'll be covering the action in the market briefly for Tuesday, March 29th, and then we'll see how things look for Wednesday, March 30th. And it was a pretty positive day. We were able to break above resistance. Technically, things are improving. We were able to get above the 200-day moving average with the Dow. That's quite positive. But on the other hand, we're starting to look a little short-term exhausted. We're showing a lot of our indicators as giving us, both in the short term and intermediate term, they're giving us overbought indications right now, or at least are in overbought territory. So what happened on Tuesday? We had a real gap higher. In fact, we gapped above R2. That's pretty high. And then after the open worked its way through, prices then ended up bouncing between R2 and R1. And we were just kind of bouncing around in that area. But as the day went on, we saw late day buying that took us above R2. And we ended up closing right near the high, not at the high, but not too far off of the high either. We ended up being up 1.23%. Volume did increase compared to the last few days, but it's still below average overall. The technicals are looking quite positive right now, but maybe a little exhausted at this point. We are coming up to the end of earnings season. Of course, everybody's talking about inflation and interest rates. The geopolitical concerns, especially with Russia and Ukraine, right now seem to be a little bit more positive. Now, that could always change, but the market was in a mood to take whatever news it got and twist it around or spin it into justifying higher prices and justified buying. And then we're also dealing with an inverted yield curve and inverted yield curves. And if you're interested, on the 29th, yesterday, I did record a supplemental video where I go through and discuss what is the yield curve, what does it mean, what do we need to look at, what does that mean for stocks, and so you might find that useful and helpful. So what are some comments that we can take from Tuesday? We're out of correction territory, and we've been out now ever since we bounced up out of that base. The technicals are positive and keep improving, both the moving averages and the oscillators. Prices are still in a range, and we're probably going to stay in that range unless we can go back and hit a new all-time high. We were able to close above the previous short-term double top, which had been posing some overhead resistance. We got above that, we stayed above that, and we closed above that on Tuesday. Russia-Ukraine seems to be a little more positive currently. Of course, we're fixated on inflation and interest rates. They're still having a lot of lockdowns in China. And then people are really talking about the inverted yield curves because there's more than one. The economic reports, I have to cough, were taken pretty much as positive on Tuesday. We're still overvalued when you're looking at the S&P by itself. And after earnings season is done, I'll be able to go back through and do some longer term studies and bring up some charts that I have, and we'll get more of a read on how all that's playing out. But if you compare it with bonds and some other areas in the market, we're more fairly valued. This is one change that we're seeing. The trend is possibly strengthening and to a positive reading with the ADX. And I do have a chart. Well, I'll show that briefly. The bias is positive since we had an up day, and the momentum is positive because the last number of days have been positive. So let's go through the day's session. First of all, looking at how we had a breakout on the daily chart, and that was pretty positive here. We had these couple of different resistance areas. Well, we were able to open with a gap higher and then actually close near the high for that session. So we might fall back from here. We might go sideways. We might be a little bit exhausted, but at least right now, this is looking quite positive. And then here's the ADX, where we're seeing it start to turn up as the green line and red line become further apart from each other. We don't necessarily have to drop down to 20. Now, if things slow down, we might do that. But right now, it's really picking up on the strength of the buying. Our Arun is also looking quite positive. We're pegged at the top with green. That's very positive. And we're showing a decline in selling, which is also positive. So overall, our oscillator is advancing. We're up out of the rainbow for right now. And the longer we can stay above that, the more these lines will improve. We are above the moving average, the 200-day moving average with the S&P 500. And as long as we stay above that, that helps the long-term trend. And then I wanted to bring this up because this is a big deal. When the Dow crossed below the 200-day moving average, that was a big deal. Well, now we've been able to cross back above it, which had been acting as resistance. And that is pretty positive. That's, for a lot of people, that's their line in the sand to determine, are we positive or negative? Well, where's the Dow in relation to its 200-day moving average? Now we just have to ask the question, can it stay above its 200-day moving average? So what's our outlook for Wednesday? We're out of correction territory. We're in a range. We closed above that short-term double top. We're getting near the end of earnings season. We're still battling between growth and value. There are the yield curve concerns, but we did close above the simple moving average on the Dow. We have GDP report coming out on Wednesday with the ADP employment change report, and then the weekly mortgage apps index is coming out. There's still all the geopolitical concerns with Russia, Ukraine, the lockdowns in China, and then a lot of people are really talking about the yield curve and the inverted yield curve right now. So what are our different scenarios? And as I state in the daily video, when we're going up, I tend to dwell more on down. That's just because I don't want to get caught off guard. So if we're going up, I'm looking for more negative things. It's not that I'm a doom and gloomer. When we're going down, I'm looking for more positive things, because it's what you don't expect that really can hurt your investing and trading success. Now, I'm pretty much saying that A is not really looking very likely unless we really start to turn and go lower. It doesn't look like we're going to go back to that previous trend and that we were just bouncing to wear off some extreme negative readings. That's looking less and less likely. But what's more likely is that short term, we're overbought right now and also have some overhead resistance. Another thing that could drive prices lower are rising interest rates. Now, we saw interest rates pretty much decline on Tuesday. Well, if they really start turning around and going back up, that could have an impact on stocks, as well as the different yield curve concerns. And then I had this positive yesterday, but right now, since we were able to get back above the 200-day on the Dow, you have a lot of disbelief that could be turning into belief, because a lot of investors use that. And a lot of investors that do this as a hobby or they manage their portfolio as part of their overall lives, they're not really as in tune to what's going on, so they may react more. Well, a lot of times this crowd can be late to the party. Doesn't mean we're necessarily going to stop, but part of the reason why we climbed was people really were suspicious of the climb. Well, now that we're really advancing, people are starting to believe that we're going to go higher from here, and we may end up doing that. But it also means that we're getting a little more complacent. We're not as fearful. The market is not climbing that wall of fear right now. So that could be a negative. You get too many people that are too optimistic. Now, looking on the positive side, what we're currently in right now, it looks like this is what's happening, where we have come up out of that base. Our oscillators and moving averages are positive. We closed above the short-term double top. And then a lot of what helped the market really advance was that disbelief. But is that starting to turn into belief right now? And then this is probably a least likely scenario currently, where we go sideways, but that still could happen. We could slow down. We might chop for a little bit. The ADX could decline below 20. and we see price movement really slow down and work its way more into a trendless environment. But that doesn't seem really likely right now, but it's always a possibility. We have to allow for all three of these things at the same time. So our overview is that the S&P is positive and could be breaking out of the range that we've been stuck in for quite a while. Short term, we're positive, but we're showing some overbought levels as well as still some overhead resistance. Intermediate term is also positive. Our oscillators and moving averages are positive. At least with the S&P, they're more for support, but we still could have some resistance overhead. And then long term, we're positive and improving because we continue to be above the 200-day simple moving average. So thank you. I hope you enjoyed this little snapshot update. If you want to see the full-blown daily video, you're more than welcome to do that. I just do these videos to try to respect your time and your desire to sit and listen to me talk. But I hope you have a very good day, and I will prepare the next video after Wednesday's session.